And it is Friday, so Todd Preston from DA Davidson joins us, and this time, of course, it's via Skype. Good morning, Todd. How are you doing?
Yeah, I'm very well. How are you?
I'm doing pretty good, hanging in there. We sure miss having you here in the studio, but
I know it, yeah.
glad we're able to do things this way so you can get us all caught up. So talking about that, it's been another week for the stock market. Tell us about it.
Yeah, lots of volatility still. Big sell-off Wednesday. We were down over 900 points. Rally yesterday, and the Dow. The volatility is still there, but the intensity seems to be lessening a little. We're seeing less 1,000-point days where we're up 1,000, down 1,000. So that's tempering a little bit. But yesterday the Dow was up 470, the S&P was up 21, the Nasdaq was up 16. So the technology sector, which really represents the Nasdaq, was a little weaker, only up 16. So, but again, the volatility is there. Hopefully, it's going to get a little more muted as time goes on.
And something else big in the news this week, jobless claims. They're soaring again. Tell us more about that.
Exactly, yeah. So 6.6 million filed last week versus 3.2 million or something the week before, so double. And so over the last 2 weeks, the economy obviously has just been grinding to a halt. The prior largest single jobless week was 700,000. So the impact is really showing up in the economy. One of the only bright spots was oil. Got some good news. It appears as though Saudi and Russia have agreed to reduce production with all the planes halted and the lack of travel. There's just no demand for fuel, and there's an oversupply. So oil was below $20 a barrel at one point last week. It rallied yesterday, but it's still down 60% from where it was. So, and we're seeing it here. We're seeing gas under $2. I've heard there's places in the South where it's under $1. So, classic supply and demand issue. There is very little demand and lots of supply. So, it'll take a while for that to clear out.
And finishing things up here, IRA holders are maybe a little nervous right now with everything that's going on. So tell us about the CARES Act and how that can have some good news for them.
Well, one of the benefits of the CARES Act is the required minimum distribution for those that are 70 and a half or 72 and a half, if they happen to be in January. They're not required to take their distribution this year. It's been suspended for the year. So if you haven't taken your distribution, you don't have to. And the worst time to take money out of an investment is when it's down like this. So that's good news. Better news, if you took it already within the last 60 days and don't need it and would rather put it back, you have the ability to roll it back if it's in the last 60 days. That's standard. Now, what we don't know is if they're going to extend that so that you could do it going all the way back to January 1. There should be clarity coming on that. There are other provisions too in there that can benefit investors, but we're not giving tax advice. If that's something you want to consider and are interested in, talk to your tax advisor, make sure it makes sense for you. But it could be an opportunity to get money back in your IRA, get it back invested when the market seems to be at a low. And then hopefully benefit as the market recovers.
All right, Todd. Well, thank you so much for all that great information. We appreciate it. You stay safe and healthy out there.
Thanks.
Have a good weekend.
You too.
All right, thanks. We'll be right back after the break.